prevailing concept of definition are creating confusion among students. Students, when use the term depreciation and define the value, they connected the value with the market value. I'm Dr. Safdar Husain Tahir, postdoc UWA Business School, the University of Western Australia, Associate Professor, Lalpur Business School, Government College, University, Faisalabad. Today we are going to present the definitions of the depreciation with more clarity, and the student can easily understand the concept of the depreciation. The present definitions in the literature are as declining in value of a physical assets over time, the value and asset loss over time, monetary value decrease over time due to wear and tear or obsolescence, reduce the purchasing value of money. That are the prevailing definitions in the literature. A student confused, and when they connect the value and when they try to understand the value, they connect wrongly the value with the market value, as this asset is acquired for use rather than for sale. The assets on which we apply the depreciations are not intended to purchase for resale. They are intended to purchase for use in the business. Suppose that we purchase a bike of 1 lakh and 50 rupees. The life of that bike is a 5 year. If the market price suddenly surged, let's suppose up to 2 lakh, what would happen? Is the life of that bike increase? The answer is big no. There is a no difference in the life whether the market value is 1 lakh and 50,000 or market value is 2 lakh. We are not going to resell that bike, but we purchase that bike for use in our business. So, what is a depreciation? Depreciation is a systematic allocation of cost to expense over useful life of the capital assets. What portion of a cost become expense is more important. Assets are purchased on cost and they are written in the balance sheet on the value of the cost. And when we use the asset, so some portion of the cost becomes expense, and we put these expense in the income statement. Suppose that we purchase a bottle of Pepsi and delivered 50 rupee note to the shopkeeper. Is it cost or is it expense? Certainly it is cost. We so far not use that asset. When we use that asset, it will become expense. We take the first sip, and the first sip, some portion of the cost becomes expense. We take the second sip, yet another portion of the cost becomes expense. We take the third sip, yet another portion of the cost becomes expense. Similarly, all the cost becomes expense. So, depreciation is a systematic allocation of cost to expense over its useful life of capital assets. Actually, the life of the asset decreasing. Depreciation means reduction in the asset's useful life rather than its market value. It doesn't relate to the market value. Depreciation refers to the reduction in the useful life of an asset, not its market value. It reflects the asset usage over time rather than any change in the market price. So, it's a wrong to connect the depreciation value or wear and tear with the market value. We we are not purchase that asset for resale but for use in the business. So depreciation means it's a reduce the useness of the value. Depreciation doesn't mean that uh, it's only the wear and tear, it's only the wastage of the assets. Actually, it is a reduction in the usable life of the assets. Thank you. Keep watching.